Hey guys, I'm Hunter with Nelson Insurance. I get a lot of people asking me, hey, can I get on fleet insurance? So I'm going to get into it right now. So fleet insurance is not like hey, I'm on a fleet policy or I'm 9 trucks. Now I'm going to switch to a fleet policy. And there's all sorts of like this. It's like not like a different policy per se. It's kind of like one of those terms where like full coverage, like it doesn't really, it's not a real thing, but it's kind of like a nickname for something that might be there for you. So when you're getting into fleets, you got to remember that every single insurance company is looking at fleets in a different way. Some are going to count fleet as 10 trucks. There's commercial auto carriers going to count as 5 trucks. Some of them will, and some of these guys are going to say, "Hey, to join our program because we'll insure big fleets, we're going to need 50 trucks. We're going to need 500 trucks, something along those lines, right?" So it depends company to company. If you are 50 or so trucks, you're paying, over 250,000 a year, 500,000 a year. I do have a video on captive insurance, which might be a good option for you. So go watch that because captive insurance is where you're going to create your own insurance company and you're going to get a say in everything that's going on. If you are still looking through the marketplace, which is, hey, I'm buying insurance and paying these guys, I'm not getting any dividends or anything on it. You're going to be looking at what the threshold there is for fleet. Again, like I'm saying, most of these guys are considering the 10 units as a fleet here. One company I do know of that is 5 trucks, considered kind of like their fleet program, is Fairmatic. Fairmatic is pay per mile, all this type of stuff. They do not insure semi trucks, but if you guys are, like household good movers or couriers or non emergency medical transport, just in the transportation industry, they might do this or they will do this. But let's get into some of the companies here that are actually, what you guys care about, the semi trucks. So some of the companies that are not going to be 10 trucks, but they're considered their fleet insurance. They only do fleets. They're usually doing bigger fleets, or considering what you call a big fleet. But these guys are looking for the above 10. So you've got Carolina Casualty, who's a sister company to Berkeley Prime and Berkeley Small Business. Carolina Casualty wants 50 plus units. Berkeley Prime is 15 plus units. Then their smaller sister company does the 1 to 14. You've got Protective, who wants at least 25 units. Protective has now been bought out by Progressive, so it's Progressive Fleet now. You have DMZ. DMC is a sister company to Crum and Forrester. So if you guys know Crum and Forrester, they're very competitive. They're very picky, but they'll do 35 plus units. Then you've got companies like ROI, Hudson, those guys who are going to want, the 20 something up there plus, and so on and so on. Once you get into massive stuff and you're still with, the marketplace, you've got companies like Chubb and such who will go in there and look at you if you're like 500 or so units above. Now, let's say you're just creeping up from like the 8 and 9. You're like, hey, I'm really close to 10. I kind of want to get in this fleet insurance that all my buddies are talking about. What does some of that stuff look like, right? So with some of this stuff, you're gonna get AIG for one who won't accept it, and yes, unless you're 10 plus units. There's a lot of these programs out there like Highlander Specialties through a brokerage, and they want 10 plus units there. And and then those are some of the companies who are gonna be lower, like the 10, you're just hitting that threshold, boom, now I can get some stuff rolling there. Um, and then a lot of the insurance companies that you guys are familiar with, like Great West, Century, Acuity, Progressive, like all those guys there too, will allow you to go from the 9 units to above. The only ones that I'm really aware of who don't want you to go above fleet or above the 9 units are going to be like Berkeley Small Business is 14, and then you got to move up to their sister company or you got to find something somewhere else. If you're with Geico, they're gonna allow you to maybe grow up to like 10 or 11, but you're kind of stuck at that 9 is really all you can be quoted with there up front. Now, okay, so we talked about all the entry lines of, hey, how do I get into fleet and what does that process look like? Now let's get into like what does the quote unquote fleet insurance actually look like or what does it do here? So, fleet insurance, it's not like it's like truck insurance is not like personal auto insurance. If you got three, I don't know, private passenger vehicles in your auto insurance, you had a fourth, those other three are going to go down in price. That's not how truck insurance works, unfortunately. You're not going to add, you're not going to be at three trucks and add two more and be at five. And it's like, oh, okay, well, I was paying 17,000 truck, now it's going to 15,000. Unfortunately, it's not how it works. With fleet, companies are going to be typically a lot more competitive on that stuff because you're going to have underwriters who are definitely be looking at the stuff. Not a lot of it's system generated, it's spitting out a price. You got underwriters. So you're going to want to know. So these underwriters are going to be looking at this and you're going to want to tell your agent everything that you're doing with hey, here's my safety programs, here's my maintenance programs. Some of them want financials, which I know a lot of you guys like that's none of their freaking business. But they're knowing that, hey, if I go write this account, or if I go provide this guy a quote on insurance, believe it or not, insurance companies are not making bank off of truck insurance. They for the last 11 or 13 years, can't remember what it is, they've been over 100% loss ratio, or they've been losing money every year. The only reason they are making money and still providing you guys truck insurance is because they're investing the money and they're earning the dividends on it or the interest. But, so they gotta be on the account for a year, 2 years, 3 years to at least recuperate their money on that deal, because when somebody writes a piece of new business for truck insurance to you guys, they actually lose money here right off the bat with the underwriting fees and such. So you're gonna get underwriters who are gonna look at all of your, they're gonna look at your business. All these underwriters are gonna look at it, and they're gonna get a little bit of say in the price here for sure. So you're gonna want to talk to your agent, let them know everything you're doing. Hey, here's my safety procedure. I do safety incentives. I do random drug testing. I've got all the dash cams in my truck that alert my drivers if they're fatigued. There's dash cams now where I say, hey, wake up, wake up. If the driver's looking fatigued and he's, possibly getting into an accident, they'll let him know, hey, this guy's distracted. Every time he looks at his phone or doing something on those lines, and alert the owner of the company. So if you guys have any of that stuff, you're gonna want to be letting your agent know exactly what's going on. So now that you got underwriters looking at it, they're gonna get a little bit of say in this. Some of the perks for you guys too, besides just that, hey, I can, if I look good for an underwriter, I can get a little better pricing, is there's going to be annual reporting policies, there's going to be monthly reporting policies. And what the heck does that mean, right? So let's say you guys are 5 units right now and you're watching this video and you're with Progressive. Progressive has got, the second you bring on a truck, you got to let your agent know, or you got to call Progressive and get that truck added to get insurance on it, right? Or you got to add a driver and you got to do all this stuff. A monthly reporting policy is going to say, hey, if you're swapping out trucks and drivers all the time, you continue to grow. Well, shoot, if I'm getting a hold of Progressive every time I gotta do this, or I gotta go home my agent, I gotta wait. Like, this is just such a pain. There's so much. I gotta make all these changes. Instead, you can do a monthly reporting policy where it's, hey, Mr. Agent, Mr. Progressive, Mr. Insurance Company, here is my changes made for the month. It's going to get them added. Boom, changes made, and they'll have coverage as long as you're adding them within the 30 days. There's annual reporting policies where they could be basing you off of your trucks for the year, your mileage, your revenue. The main one there really is your mileage reporter. You can do a mileage based policy for the year. So like I always talk about pay per mile insurance. Well, if you're non-fleet, you got to hook up to all your ELDs. They bill it at the end of the month and all sorts of stuff. Whereas this annual reporting policy is going to be kind of like a work comp policy. If you guys are familiar with how the work comp works, the work comp, if you're not synced to the payroll company or the payroll system, it'll go in there. You're going to go to your agent and say, "Hey, I think I'm going to do $1 million this year in payroll." Well, that's what work comp companies base the premium off of, is what your payroll is going to be for the year. Well, then you're going to get audited. If you guys got work comp, you're familiar with an audit. That's how this is going to be with an annual mile reporting policy. So you can do pay by the mile basically, but for the year. Say, hey, I got 50 trucks. I'm going to be driving probably 5 million miles for the year. Okay, great. Let's just say, for example, I'm just spitting a number out here. It's 500,000 for the year for your insurance. Okay. So you're 100,000 for, or you're 100,000 for 1 million miles you're driving. Okay. Let's say you go and drive only 4 million miles for the year. Perfect. Insurance company's going to cut you a check. Here's 100 grand. Boom. Here's your 100 grand premium back. Now, the other thing is though, if you go in there and drive 6 million miles for a year, like, ah, shoot, I knew we were driving more. I kind of forgot to let my age know. Now you're gonna have to take your pocketbook or your checkbook out and write the insurance company a check for 100 grand at the end of the year. So you gotta be a little bit careful with it, but it's mileage based. So that way, if hey, it's a tough year, I'm kind of losing contracts, my revenue's down. You're gonna have to be your insurance is gonna compensate for that. So that's nice. It's basically like a revenue. Like you're gonna pay the more you pay, the more revenue you're typically making because the more miles you're putting on. So it's kind of nice. So that way, it's not a fixed premium. If you're doing really well, great, you benefit from it. But if you have it's a tough year or something along those lines, your insurance is going to adjust for the revenue and the miles you're putting on. So that's a little bit of fleet insurance. We do a lot of fleets. We've got a lot of the insurance companies. I didn't mention all of them because I don't want to give all my trade secrets, But we had a lot of fleet insurance companies. We got to be at least 10 plus units or something on those lines. So if you guys are fleet and looking in at, hey, I want an annual mile policy, I want a monthly reporting policy, let me know. But otherwise, I'm here to just provide value to truckers. So if you guys would like, subscribe so I can keep making these videos. I can keep helping you guys out and hope pretty much expect nothing in return. So I certainly appreciate it.